So, there has been a great divide in the SOFI community with people freaking out, hating on the stock, but yet others are holding steady, and yet others saying this latest round of news is going to send the stock to the moon. So, let's talk the latest SOFI news, what it means to you as an investor, what Noto actually said on earnings in the fireside chat, and we will discuss the ridiculous retail freakout as well. And we'll look at valuation as well. So we have a ton to get into today, guys. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today with all these topics. All right, so let's jump right into it. Number one, new product offerings. All right, I love what they're looking here to do, and I think this is kind of we won't call it a next level product, but definitely something that I haven't seen too much of, and I haven't seen it offered too much, and I believe it provides them a very unique opportunity in the overall space in regards to financing. So essentially, they're going after credit card markets, not necessarily to sell them yet another credit card, but to offer them other alternatives to their personal loan products, which a lot of folks are taking their personal loans, but I think it was something like 80% or so take the personal loan just simply to pay off credit cards. But there's another market out there, and let me kind of explain this all the way through. It'll make a lot more sense as we kind of get through the entire example here. So just follow me here. This is because their personal loans save the consumer a ton of money in interest, right? You have all your credit cards over here, and you take out this personal loan over here to pay off all those credit cards. So that way you get it at a much lower rate than what your credit cards are. So obviously, when you do something like that, you save a ton of money in interest. And of course, the time to pay off that entire balance is much shorter as well. However, a lot of people hesitate, and basically they would have more personal loans if they would do this, but a lot of people hesitate because the monthly outlay for the consumer, for the person that needs this, actually goes up with a personal loan. So essentially, on one side, they are paying more every month by refinancing basically all their credit cards into that personal loan, which many people don't want to do. They don't want to pay more every month, even though it's in their best interest, and mathematically, it's the best way to do it. Now, right or wrong, the average consumer here in the US cares about the monthly payment and getting it as low as possible, not paying the least amount of interest possible. That's exactly why a car salesman asks you, what monthly payment are you looking for? And then they will get you in a product that is better than that, basically a lower number than that monthly payment, right? That has actually cost you more than it would to take out the loan for a better product, a better loan product with better terms, but that better terms and that better product may come with a higher monthly payment. Now, I'm not trying to argue, is it right or wrong? I'm not sitting here trying to argue that people should or shouldn't think that way or anything else like that. But that is the sad reality of the American consumer and how they view money and debt. So for those that don't want to do a personal loan with the higher monthly payment, this product is essentially for them. They can take out basically an interest-only type personal loan. It's kind of the best way to describe it there. And they'll basically see the same or a lower payment each month because the rate is much lower than the credit card rate. So essentially your rate with a credit card is what, 25, 30% now, something like that. That's ridiculous, I know. But it'll basically go from that all the way down to 12 to 15%, per example, with the SOFI personal loan, interest-only loan, whatever the heck we want to call it there. The payoff time is actually faster since it is interest only for a limited period of time as opposed to a credit card, which those can actually go out infinitely if you really think about it. And the interest rate, more importantly, is considerably lower. And they can basically, as the consumer, kind of construct it how they want. That was kind of the way Noto explained it. They can basically, construct it how they want to keep the payment low for a period of time, if needed, to keep that payment low, and then obviously move it over to the higher payment option later on to pay it off faster. It's basically kind of like cash flow management for individuals to take control and pay more when they want and less when they want, but without the high interest rates and all the other things that kind of come along with credit card debt in general. So I personally like the product a lot, guys. I think this is massive for SOFI long term. But keep in mind, this will take time to create enough adoption and awareness to have it make meaningful impact on the bottom line. Heck, it's not even here yet. I assume it's going to happen this year. I mean, I don't know. Maybe you do talk about a product that's 3 years away. But usually whenever they're talking about a product that's 2 or 3 years away, he says that. He didn't say that. So to me, that's something that's coming this year at some point in time. But we aren't getting anything meaningful this year to the bottom line. And if I had to guess, next year either with this, as it's kind of being built out and kind of built up and awareness gets out there and it kind of becomes offered more and more and kind of picks up traction out there, because it's definitely an unusual product compared to a lot of other products out there, which I love. But remember, it is done that way on purpose. And SOFI does things that way on purpose, which leads perfectly to my next point. So point number 2, Noto reinforces what they are doing. Look, as much as we all want SoFi to go to the moon tomorrow and every product to go to the moon tomorrow and for them to move a lot faster than what they are, he said emphatically, and he said it before, so this isn't the first time, he has said it emphatically. I don't know how many more times the guy needs to say this for people to understand it, especially us as investors, but he said they will not steal from future growth to push growth today. This is what you want from a company long-term if you're a long-term buy and hold investor. A long vision, not a short-term vision and profit chasing. This is where big money is for long-term buy and hold investors. You want basically a foundation poured, a foundation laid to where you can have explosive, not explosive short-term growth, explosive, sustainable long-term growth for years into the future. I mean, do you want SoFi to be a flash in the pan or have sustained growth like big tech companies out there have had for decades now in some cases, who have built out incredible businesses that just spit off massive profits and continue to stay ahead of everyone all these years later when they should have been quote unquote legacy, but instead they're leading the pack? That's why, because they laid these foundations a long time ago. That doesn't happen if in the beginning you don't lay the foundation for all that. And especially in financial services, it's even more important to do that and not go profit chasing. Now, I'm not saying they will see the same growth that big tech has gotten over the past decade plus or whatever the case is. I am not saying that at all. That would be wonderful. But again, that's all hype and speculation and all that other trash like that, we don't do here. We're not going to get that kind of growth. But on the flip side of that, there is no reason why a great company and a great management team like SoFi has cannot use a similar strategy and kind of business model to give us sustained, steady, great performance in the future. Now, for traders or people that just want hype runs because, I don't know, to the moon and you should 10x your stock every year, and if you don't, then you just have bad stocks. Well, it's not ideal, and it may even suck that they run the business that way. But for us, long-term buy and hold investors, it is music to our ears, guys. It means more time, more importantly, to buy shares on the cheap side before we see that sustained, incredible long-term growth. And remember, share count is what matters. Not to the moon today. That is not what matters. What matters is share count. I can't say it enough. So if SoFi stays down another year or 2 years before we see some big runs in that's great news to me. I already own a ton of shares because I've been able to buy them for the past 2 or 3 years at incredible prices. But if that happens and we get another couple of years where it doesn't really do a whole heck of a lot, I will own far more shares than I do now, and I will make far more money, more importantly, in the future. So you can make all your money right now if it goes to the moon today. Hey, that's great. You know what? I'd rather delay it 3 years, me have, 3 times the amount of shares, and then have it go to that same exact moon point. Who makes more money? It's the guy in number 2. It's basic mathematics, but yet we get twisted because we want our profits today. That's traders. That's okay if you're a trader, not knocking it, but that's that mentality. You're getting exactly what you want as a long-term buy and hold shareholder, but apparently other investors aren't exactly happy at that, even though they say they're long-term buy and hold investors, but they're not happy with that, basic math. So let's discuss that part next. So number 3, SoFi retail drama. So I will put some math to all this stuff and see valuation, and we'll talk about that here in just a second, guys. We will get to it and we'll put the math to it. I covered each individual point that's kind of been thrown out there in the SoFi community, during the freak out. There was a lot of them. And I'm sorry, it's just not for public consumption here. So I am aware of them, and I do have a very strong opinion on that, but I'm not here to call folks out or anything else of that nature. But I still want to hit a few points here that kind of, I see across the board. It's not just a SoFi thing. I see it with Palantir. I've seen it with Tesla in the past. I've seen it with Meta in the past. I've seen it with a lot of different stocks here. So I want to make sure we address that right here. Noto has been very clear from the start with timelines and what they want to do. His guidance has been very clear. Every product they release is not sending the stock to the moon, nor are they rolling it out and designing it to do that. So believing that that's the case will lead you to being disappointed because you aren't listening to what the management team is telling you and instead following all these crazy narratives that aren't from management. That's what's called speculation, or taking what management says and kind of twisting it to that must mean this. Well, that must mean that. And then now that becomes the driving narrative of every time Noto says that, you think that's what he means, when it's not what he means. He's never said that in the earnings call specifically, especially when we're getting down to numbers and things of that nature. He's consistently said, we want to build it right for the future. We want to take our time and build it out for the future. And we're not going to pull the future into the now in order to do that. That right there is your biggest clue right there. If you don't hear anything else he says, That right there tells you what your expectations should be. Now, secondarily, they have used the beat and raise strategy for over 3 years now, but some think he should have changed that strategy and just all of a sudden now be extra rosy with the guidance this time around. I mean, why? I don't know. I mean, stop doing what works all these years. I don't know. The only reason that was told to me by my group members was because, hey, let's not do what's worked for years because we want to squeeze the shorts or something of that nature. And that's just not how that all works in general. It's just, it was kind of ridiculous all the way around. So to me, when I look at this and I look at this stock, let's get into the numbers here a little bit. If you thought SOFI would be at $75 this year, my question is why? What EPS guidance did they give for 2025 that told you that's what it's going to be this year at 75? I can give SOFI a multiple of 100 and use what SOFI gave us for EPS guidance, and I still don't come close to $75 per share this year in the best of the best scenarios with a ridiculous multiple of 100. So where these ridiculous price expectations come from, I honestly have no clue, and I'm not going to try and figure it out either. The bottom line for you guys here as investors watching this channel is if you aren't taking the guidance and doing a simple valuation with that, you will fall prey to stuff like this and narratives like this and everything else. Noto gave us the guidance. You take that guidance, you give it the multiple you think is reasonable, and you can project forward those 2 years in this particular example for SOFI. So, and let me just do more math here for you guys. A great fintech multiple is a 60, right? A great bank multiple is 10 to 15 or so. I think they get a hybrid of some sort since it's not really a full fintech, and obviously it's not a full bank either. So I think they get a hybrid of some sort since they are clearly not a full fintech and obviously not a traditional bank either, like I just said, because I realized I just repeated myself twice and I apologize, guys. A little bit tired here today. But even if you want to give it a pure fintech multiple of 60, a great pure fintech multiple of 60, given the guidance on the upper end that Noto gave, which was 80 cents per share in 2026, that gives me a price at $48 at the end of 2026, guys. And that is like a dream case. That's beyond a bull case. It's not a bull case. This is beyond a bull case. This is a dream case because long term, we won't see a 60 multiple, and it requires them to not only do that and get a full fintech multiple, you also have to hit the top of the guidance of 80 cents. Not the lower end of that guidance, which is 55 cents or somewhere in between. They have to hit the top of that guidance. That gets me to that number in 2 years. So where the price targets of 45 at the end of this year and 75 in 2026, much less 150 or 300 or some of the other ridiculous things that I saw, is just simply silly talk. In a dream scenario, I can barely see 45 in 2 years. Now, can Wall Street pump it up to that number? Of course, absolutely. We've seen all kinds of crazy things in the stock market. Just in the past few months, we've seen lots of ridiculous stuff. But you better expect that stock is going to crater back down or it's going to trade flat for years if that happens. And ask Tesla shareholders how they enjoyed 2021 up until a few months ago, right? It was basically miserable from every single Tesla shareholder out there that had that run up and then saw the stock essentially crater and do nothing for basically almost 4 years. That is not what you want your stock to do, of course, unless you're trading. Then if you're trading, great. Hey, makes sense. Send it to the moon, take your profits and move on. But we are long-term buy-hold investors here on this channel, so it's not great. And here's the biggest thing right here with SOFI, guys, to me. Freak out aside, everything else aside, SOFI is executing wonderfully. Noto and that management team is a top 10 management team out there at a minimum, and some have it in the top 5, and I could definitely make a great argument that they're in the top 5 in the world of all the publicly traded companies. And I understand valuation, and I am very happy with the company as a long-term buy and hold shareholder, given where the valuation is right now. And I'm very comfortable where I think the stock will be in a couple of years as well, holding at that valuation because of how we bought based upon valuation in the first place. We didn't buy based upon hype or anything else like that. We bought based upon valuation, meaning we scooped up a lot of shares under that $10 mark. Obviously, a lot of shares under the $5 mark, if you can believe that, a few years ago. Those are the things you need to understand when owning this stock and ignore all the rest of the noise. And if you need help doing a valuation, understanding how to set price targets and how to do this, I may have left something special in the pinned comment down there for those of you guys that stuck around the video this long. Make sure you check that out if you want to take 5 free courses, get your free coaching, be a part of the best 6, 7, and 8-figure Discord out there. See my complete watch list with price targets. Guys, there's so much involved in the group. Check out the pinned comment, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.